Today's Inside Wealth Report focuses on the lost decade in Manhattan's condo market. Robert Frank joins us right now with more, and this sounds like a bit of a story you have to tell here. Not just a story, but a pretty concerning one.
It is because, we hear about Manhattan real estate just going up and up and up, and the prices are crazy, and there's this affordability crisis. But in fact, 1/3 of all condo sellers in Manhattan over the past year lost money on their apartments, but it all depends on when they bought, not so much location. So of those who bought before 2010, the median gains, they did well, were between 29 and 45%. That's according to a new report from Brown Harris Stevens. Now, those who bought after 2010 are likely to see losses or small gains of just a few percent if you add in inflation, renovation costs, transaction costs, which in New York are around 6 to 10%. Those losses for even those slight gainers likely far higher. Now, the purest measure of Manhattan real estate values, which is median price per square foot, has essentially been flat since its last peak in 2016. The low returns may be one reason. Even the wealthy right now are staying on the sidelines and renting. The number of New Yorkers making more than $1 million a year who rent has more than doubled since 2019. Now, brokers say the market right now is headed higher. Median prices have increased for the last 3 quarters. That's the first time that's happened in 3 years. A big question, of course, one we've talked about a lot here on Squawk, is the mayoral election. Signed contracts for luxury apartments in September were down 39%. Wow. That may be an aberration. That may be a sign of things to come. We don't know. But for the full story on Manhattan's lost decade in real estate and why the high end is actually the exception in this 10-year rule, you can check out the Inside Wealth newsletter at cnbc.com/insidewealth. That's out tomorrow.
All right, a lot of questions from this. First of all, the condo market versus the co-op market. How big is each, and do they reflect the same trends?
Condo market much larger, but they run in parallel in terms of pricing and demand. The condo market tends to be a little bit weaker. So if anything, particularly on the Upper East Side and Upper West Side, where people want new construction, they want new looking apartments, those have probably fared even worse, particularly after 2010.
And when you say the extremely high end has fared better, what are we talking about? What is extremely
This was
high
really fascinating. So if you look at 10 million plus, apartments sold for 10 million plus, that's really the top 4% of the Manhattan market. They have had double-digit gains no matter when they bought. So you bought in 2016, 2020, 2008. They have done well. And that was surprising to me because I see a lot of apartments where somebody pays $46, $70 million for something that I thought they overpaid, especially at the top.
Right.
But there's so much demand. And we've seen this bifurcated economy and luxury continuing to do well in every category, that demand at the very top seems to be immune to the cycles and to what's happening in pricing in the rest of the market, and that's continued.
That September drop is kind of staggering. Is that it could be a one-off, but how often do you see a one-off like that?
It's been a while. July and August were positive. So if you'd seen a trend, so remember that primary was July 1st, right? Or right. That the announcement was. So if you saw a fall off in July and then worse in August, then you would see, okay, we have a trend. July and August were positive. September was down quite a bit.
I think people didn't believe it was.
That's another
imminent.
argument.
You know what it is today on the betting market?
What
you
is
know
it?
it? You see this
80-something%? But that's
93.
93.
Mamdani.
But the reason for the drop-off, Becky, according to brokers, is there's been a big drop in inventory. It's not so much demand. It's that and the reason we haven't had inventory build up is because of high interest rates. Developers aren't building, and that's going to feed into the whole affordability issue, which is just going to get worse.
It's only going to get worse.